Guys, there's a lot of concern with Apple in China. France in previous years had banned the iPhone 12, and now China, the rumors are that they're going to ban full use of iPhone, not just one version of it. So even though the company's up 44% year to date, there's a lot of concern going forward. Mo, you're our Apple expert in house since your basis on Apple is $17 F off, by the way. Tell us more about what was the iPhone 12 ban in France? How did that differ than this China potential ban?
So the iPhone 12 one came from basically the way that the satellites emit things to your head and the worries about cancer and whatnot.
The radioactive stuff.
So iPhone 12, we're on version iPhone 15 now. So it's an older model. But a lot of people are saying that Apple has not advanced the safety of their phones to this point. So they actually did ban it there. There were rumors that iPhones would be banned in China. That has not happened yet. Everybody has denied that. Every Chinese authority has denied that. So nothing true, but that was a big spook for the market.
So what was the reason why there was talk of China banning the iPhone?
It just says government agencies told employees not to use iPhones for work, but there was really no specificity on it.
Okay.
Yeah.
Kind of like with TikTok in the US.
Security issues.
Of
That's
course.
really what it comes down to.
Security issues. Okay, great. So guys, again, Apple's up, but we're going to take a deeper look at it because temporary bad news is usually a good indication of a time to look at a company. You want the temporary bad news to cause the price to fall like crazy, okay? Now, we all know Warren Buffett has a big Apple ownership share. The stock's all-time high was 3 months ago at $198 a share. It's currently at $179. So now done a ton, about 10%. But year to date, it's still up 54%, guys. Huge. It's absolutely nuts. It's a $2.8 trillion company. And Mo, look at this. $101 billion in free cash flow in the last year.
It's insane.
How many companies even make $100 billion in revenue?
I know. I was actually just thinking, have I ever seen anything close to that in the free cash flow area?
No, I think this is the highest free cash flow I've ever seen for 1 year.
Yeah, this is insane.
$101 billion. Now, guys.
I didn't know our software went to 3 digits.
Guys, you got to understand, this is amazing. But with Apple being so big, they did $384 billion in revenue. Growing is going to be difficult. Yeah. Let's say Apple had an opportunity to enter a business that generated $3 billion a year in extra revenue. For the average company, that'd be huge.
For them.
That's less than 1% of the revenue.
It doesn't do anything.
It's hard to move the needle. Mm-hmm. So how do you get a return on Apple? Well, you're going to get a return by them buying back cheap shares, paying out a dividend, and that's basically the way they're going to do it because making acquisitions is not really going to move the needle a lot. Yeah. It's going to be very difficult. And new areas of growth are going to be very difficult to find ones that, again, move the needle.
Yeah.
Right?
It's going to be challenging to change the world again.
Right. Now, they do pay a dividend about 0.5%, and that eats up $15 billion of their $87 billion in free cash over the last 5 years on average.
That's hilarious.
Yeah.
0.5% is $15 billion.
Very strong margins that are very consistent. Yeah. 5-year average profit margin of 24%. Last year, 24.7%. So very, very stable company. Look at this return on invested capital, and it keeps growing.
Huge.
Guys, this is your sign of the moat. This is a huge moat, the fact they have such a high return on the money that's invested in the business. This is an indication for a lot of value investors that there's a moat here. And last year's return on invested capital was 54%. So it's growing. It's absolutely growing. Now, remember, it's hard for them to get that return on new money invested in the business. But they're decreasing their capital base when they pay out a lot of cash to dividends and they pay down debt. That's how they're getting such a high return. Okay, so let's check out the 8 pillars in the company. We love this.
Yep.
And guys, remember, if you're part of our community, you can customize your pillars up to 12 different pillars and 4 quadrillion different variations. But we have a check everywhere except for our valuation metrics.
Correct.
We have a 5-year PE of 35. And a 5-year price to free cash flow of 32. All right. Now, the reason we love this so much is it's much easier for the price to go down than for the fundamentals to go up. For example, if we wanted price to fall in half or fundamentals to double, which one's more likely to happen faster?
Price to fall in half. Easily.
Absolutely. Now, it doesn't mean the price is going to fall in half, but these are the things we want you to remember. If you're a patient investor, there will be a time when you can find a great price. Let's look at the fluctuations. In the last year, the low was 123 on the company, and that was just back in January. Yep. A mere 9 months ago. The low was 124. And its high was 6 months later at 197. If you are the patient investor, you will find a good time to buy a company. And remember, in this bull market we've had this year, 7 companies have led the charge.
Yeah,
the S&P is down except for these top 7 companies.
Yep.
The rest of it is down.
Yep.
Right? That's incredible.
That is incredible.
What are analysts saying? Well, actually, let's check out our bull and bear case in our community, guys. Our community has done a great job of engaging with bull and bear cases. So, Mo, let's pull up. Oh my gosh, a lot of bull and bear cases. Go ahead.
So, Marius, Apple is the brand of all brands. This is interesting, and I don't necessarily agree with this. One does not go from an iPhone to an Android device. I do know a lot of people who have gone from iPhones to Android devices, and they went to the graveyard. Let's see. Apple has gradually been integrating AI into its own products, as opposed to making overt announcements like other tech giants. I think the thing about Apple is that they don't talk about something until it's ready to bring to market. It's not just promise, promise, promise. Strong brand loyalty, market presence could drive public adoption of AI. So there's a lot of AI talk in here from Marius. Let's see what else. In the second quarter of 2023, smartphone shipments fell by 24%, but Apple iPhone sales only decreased by 6%, allowing the company to increase market share from 52 to 55%. And that's another big case. They have finally, there's a story I'm going to pull up, they have captured more than half of the revenue in the smartphone market the first time.
That's incredible. I'm actually surprised it wasn't higher than that.
Me too. Now, the question to me becomes, does monopoly come into play? Are they going to get broken up? Because there is that 50% rule of what you can have.
Now,
the federal government.
Remember, Apple did just get the second hardest customer of all time.
Did.
Nick, our wonderful friend here in the community, look at him smiling like that. He lost a bet to us, and he was an avid Android user, and his bet was he had to get a new iPhone. So how's that going, Nick? Nick, he's so mad about it.
Nick, you had a rough week. You had to get an iPhone.
I said this here, and he got upset about it.
And the 49ers lost to the Browns.
I said that he went into this Michigan thing. I was like, listen, I wasn't attacking you, Nick. I was just stating it was a rough week for you. That's all I was stating. I'm happy to have you on the iPhone team.
I have a losing problem.
And by the way, I was rooting for the 49ers in the sense of, well, I was being funny about it. I, of course, wanted the Browns to win, but I can't stand one of my cousins, and he's a huge 49ers fan. So here I was stuck. Nick's my guy. I love him, and I want him to be happy. His first game in Cleveland, I kind of want him to have that. But at the same time, I really, really can't stand my cousin. So I really wanted him to lose. It was a very tough one. So anyhow.
Here's a couple of bear cases.
Okay, let's go for it.
The third quarter was the third consecutive quarter of revenue decline with a 1% year-over-year drop. Here's another one. Even though Apple is in amazing mode, I feel like paying a 30 PE and price to free cash flow is a hefty price.
And by the way, it is a hefty price, but we don't know exactly what the future holds. I would have thought, I remember 6 or 7, 8 years ago, I don't remember how long ago it was, somebody I knew asked me, he goes, Paul, from a value perspective, what do you think of Apple? And it was selling for like 10 times profit. I was like, it's a no-brainer in the value perspective, but can they sustain the iPhone sales? That was my big concern. Boy, was I wrong, right? And I just sat there and said, I can't buy it because I don't know they can sustain that. And that's the hard part about investing. The story has got to match with the actual future. You can have a great story for a lot of companies. Look at BlackBerry. BlackBerry dominated the market until the iPhone came out. And then all of a sudden they went, oh, I mean, could you imagine a world in which, and of course people are going to say in hindsight, well, of course I saw that. No, you didn't. No, you didn't. BlackBerry, everybody had BlackBerry and BBM. Everybody did. And now it's not, I don't know anybody with a BlackBerry.
I remember when I got my first iPhone, people were still with BlackBerry, and it was like hard to communicate with people because everyone was on BBM still.
Absolutely.
So here's a couple of pretty good bear cases. They waste and invest a lot of money in VR if it doesn't pay off. To me, they have so much cash, it doesn't matter. They get banned in China. They fail to innovate. In his opinion, Lib, the last 2 to 3 generations of the iPhone are largely the same. I totally agree with that. Now, the right to repair bill. People can repair their iPhones on the cheap. So instead of you going in and doing the insurance or paying like $250, they're making it easier for you to repair these things, apparently.
Interesting. Which would drive down the price. Yep. Yeah, I don't know. This is a...
good cases, though.
Yeah, this is what's great about the community. We're able to engage these people. All right, let's check out the analyst estimates. They're still calling for mid to high single-digit EPS growth, earnings per share, and revenue growth of, wow, that's weird. Mid to high single digits on revenue growth and only mid to high single digits on earnings per share growth.
Yeah.
That doesn't seem like it reconciles itself. Interesting. All right. So guys, the thing we have to ask ourselves is, and this is what we like doing sometimes in our videos, is what's the right price to pay for Apple stock? That's absolutely important to understand. That's why we have the stock analyzer tool. Now, before I get into that, we've talked a lot about the community. We do a lot about the software, including all these tools above that you haven't even heard about. Now, of course, I want you to join, but I'm not asking you to make a decision, yes or no, right here, right now. What I'm asking you to do is to make an informed decision, and you cannot possibly, and you will not be able to make an informed decision from the outside. I need you on the inside. I need you here in the community engaging. I need you in the tools, using the tools. The more and more you use them, the more you'll realize the immense value of this. So just like buying a new car, you need a 15-minute test drive to test everything out. I'm offering you a test drive here, but more than 15 minutes. 7-day full access, free test drive of our softwares. 7 full days community access. You can get in there, talk to people, get ideas. Imagine the value if you just get one good idea or you understand one of your companies a little bit further. So go to everythingmoney.com, sign up. I guarantee that in the next 7 days, you'll see the immense value for this community and the software. So check it out at everythingmoney.com. And when you get in there, go to the general chat, tag me at Uncle Paul, and say hi to me because I'd love to welcome you to the community. All right, so Mo, we do Apple a lot. When was the last time you did Apple?
Beginning of September.
That's not a shock to me. Mine was end of September.
Yeah.
Actually, no, it was beginning of September.
September 6th.
That was mine as well. All right, so what were your revenue growth numbers for Apple?
So I did 4, 7, and 10.
So did I.
Okay.
Okay, what did you do for your profit margin?
22, 25, and 28.
So I did 21, 23, and I jumped it up a little bit higher to 26 and a half. Because I think both you and I looked at the software subscriptions and their subscription plan as a way of, and by the way, if they don't let people do this sharing, if they start to make it so that Apple lets you repair your phone at home, I think that increases the value of their subscription plan. Let's say they said to you, hey, you pay $50 a month and you get a new phone every 2 years or something like that.
It's true.
Okay, what did you do for free cash flow? Because as you guys can see, the free cash flow tends to be higher than their profit margin, which we love seeing.
Yeah, so I went 24%, 27%, and 30%.
Okay, I did 24, 25 and a half, and 28 and a half. Because I still think these two numbers are still high enough above their actual numbers that it can make sense. Now for PE, guys, and price of free cash flow, we always start at 15, and you go higher for a good return on invested capital, a good growth rate, a good moat, and go lower for the opposite. And I think we'd all agree that there's a moat here with Apple.
Yeah.
And there's a high return on invested capital here that's growing.
It's growing. That's the important part.
So Mo, what'd you do for your PE?
So I did 16, 20, and 24.
I did 17, 21, and 25.
I like it.
Now, desired annual return. This is basically your margin of safety, guys. You can get 9 or 10% by investing in a long-term ETF. So what return do you need to make in order for you to buy this company? And the higher your assumptions, the higher your desired return should be, right? It should sit there and be a higher margin of safety. So Mo.
So I did 10%, 12%, and 14.
Wow.
And the reason I did 14, I do think 10%.
I'm even thinking 12 is high.
Really?
Yeah, I did 9, 11, and 13.
So it actually, before I did this, it was 8, 10, and 12. But I was like, you know what? I want to take out my bias here. I always do 10, 12, and 14. Let's put it there and see where it is.
Mo has a very big Apple bias. I do not as much.
Yeah.
So I'm able to sit there and say 9. I said 9, 11, and 13. I'm fine with that. I'm absolutely fine with that. So guys, we hit the analyze button. Now, guys, just need you for 1 or 2 minutes longer because we're really going to share a lot of great information about how to understand these numbers, which is essential for using our stock analyzer tool. All right. I came up with a low price of 90 to 100, a high price of 175 to 187, and a middle price of 125 to 135. Mo, what'd you get?
Yeah, we're about the same. 85 to 94, 165 to 177, 120 to 130.
So guys, Mo and I did different numbers, but they ended up coming out the same, very similar price. Now, I have it on my watch list at 140. So when it hits 140, I'm going to be notified. That doesn't mean I'm buying it for me. What that tells me is, Paul, go do more research, understand a little bit more about it, and start selling puts at lower prices. So guys, again, if you want access to this community, to the software, everythingmoney.com, full 7-day free access. Take care.